Hi, folks, and thanks for another video here at Street Smart Options. Today's video is titled How Options Trading Works. And what we're going to be talking about is the actual process of trading an option. So now what I want you to understand is Jonathan's been doing research, as he always does, for our team and for our students. And we're going to take a look at a stock and get an idea what we look for on whether or not this is going to be a good trade, something that we would take and something that we would, show to our students that they could trade it on paper, get a good understanding on whether or not this would work for their portfolio. So having said that, folks, what I want you to understand is at the very end of this video, we're going to be making you a special offer that we came up just for the month of February. So February of 2019 is when we're looking at this. You can always give us a call at the phone number that I'm going to list at the end of the video and find out what exactly we're offering or leave us a message. The number that I'm going to be leaving for you is our recorded free number where you can get information about what's going on at Street Smart Options at any time. That being said, I want you to understand, as I said, this is a training video. This is very much like the training that we do in our paid members area, and it's also like the free training that we put in our Facebook group. And folks, you can find that on Facebook. Just search SSO or search for Street Smart Options, and that's a free public-facing group where you can join us and you can get other information like this. Now, if you haven't subscribed on our YouTube channel, please do that now or give some consideration to doing that. And if you do subscribe, hit that bell icon so that you'll always get good, timely information like the information that Jonathan is going to share with us today. So, Jonathan, you're going to be talking about a stock that's fairly well known on the Dow, but we're going to take a look at whether or not it would be a good trade for us. Take it away, Jonathan.
Thanks, Jim. Yeah, so we're going to be talking about Merck. And in this video, we're going to go through this company and explain, what we look for in finding options and kind of explaining, how options trading works. In options, basically, the biggest driver in an options trade, if you're doing a directional trade, is going to be the underlying. And so you can look at directional trades. You can basically be, bullish or bearish, or you can say, hey, I think the market's really not going to do anything. What can I do to take advantage of that? And in options trading, it's a big area, and to go over everything about how options trading works would be a little bit daunting, would be a very long video. But what we can do is we can dive into one area so you get a feel for, one type of trade in the world of options trading. And so, and it'll give you a sense for, the kind of work you have to do to find an options trading idea. So Merck & Company is a Dow Industrials company. Basically, Dow Industrials is a broad index maintained by the, it used to be owned by Dow Industrials company. It might be owned by somebody else nowadays. I haven't really kept up. But it's a broad index a lot of people follow to get a sense of where the market is going up or down. The pro investors don't really use it much. They use more the S&P 500 because it's a more of a diversified index, and they benchmark their mutual funds and stuff against the S&P 500. But anyway, in the Dow Industrials, the Merck & Company operates in 4 segments: is the pharmaceutical, the animal health, healthcare services, and alliances. They're one of the major world pharmaceutical companies, and you can imagine, they're involved in a lot of different things. From cardiovascular, diabetes, asthma, hepatitis, you name it, they have a diversified portfolio of things. And they do a lot of joint work with other companies, and hence, the 4th segment they define themselves in is alliances. So that being said, you can look at, get ideas for Dow Industrial companies by looking at the actual companies in the index here. And here we're on CNN Business. And you can see there are 30 companies, and they're major companies. And you can take a look at these companies and try to find options trading ideas just by going through these 30 companies. And, where would you start, right? Okay, there's these 30 companies. Where would you start? Well, I like to start on the chart. Say I'm mildly bullish on the market, and we trade profit cycles. So, the profit cycle now is actually neutral to mildly bullish. So we're going to go look at the charts of these companies and plug in one at a time. And that's how we came up with Merck. Merck has been outperforming the market. It's actually trading above its 50-day and above its 200-day moving average. And it didn't really fall much when the market fell in December. And just to give you a sense for what the market did in December, I'm just going to type in here the SPX. Okay. The SPX, and you can see the S&P 500 dropped a whole bunch here in December and bottomed out in late December. It was 20%, and has since rebounded and is still trading under its 200-day moving average, or in this case, we're showing the 40-week moving average, which is a synonym for that, right? Whereas, you know, we looked at Merck, and Merck doesn't look anything like this chart, right? Merck has held up really quite well. And so since we're neutral to mildly bullish on the market, you know, why don't we find a trade that benefits from this stock here outperforming the market a little bit? And so the type of trade we're going to do, we can take a look at our website, streetsmartmember.streetsmartoptions.com. And this is a course that we sell. It's actually a options trading calculator. We call it a course, but it's an options trading calculator. And we have 6 different calculators. We have a bull call spread calculator, a bull put spread, bear call spread, bear put spread, selling naked puts, and writing covered calls. And so without going into the details of all these things, because we're mildly bullish and neutral to bullish, and we're looking at a stock that's outperforming, we're going to look at the bull call spread on this stock, right? So let's go to this right here. I already filled it out for Merck. And you can see, well, first we'll go to the options ladder because that's going to show you a little bit more about how options trading works. So looking in the Interactive Brokers trading screen here, we can see the options ladder for Merck. And basically in options, you know, there are different strike prices and different expirations. So in this case, the expiration for this stock is April 18, which is in 74 days. And on April 18, if the stock on the call side trades below, say, 67.5 here, then it'll actually close at 0. The option will be worthless if the option trades below 67.5. Right now, the stock is trading around 75.8. And it's Sunday, so it's not actually an options trading day. So these bid asks are really wide and wouldn't be this wide if it was an option trading day. But so it's Sunday, it's a day off. So, but we're doing this video on Sunday. So looking at these strike prices, if it trades above the strike price at the close on April 18th, then the stock will be in the money and the option will be in the money, I should say. And so if it's, say, the stock closes at 71, the option would be worth $1 on April 18th at the close of April 18th. Now, today we have 74 days. And so in this stock, in these option values here, in these prices, we're going to have time value and volatility value. And so these are going to be elevated over the, over what it would be on April 18th when everything goes to the strike price. So now we're going to go look at one thing that drives now the long-term value in these bid-ask spreads is the implied volatility. And so if we look at implied volatility on this, and we're going to go back to our browser here, and we're going to go to a stock site, a website called Market Chameleon. And Market Chameleon provides some free information on implied volatility. And I have Merck pulled up, and you can see the implied volatility on the stock is in here right around, let's see, where's the actual number? Why don't we type in Merck, because I don't see the actual. This is the historical price chart. I should say the chart of implied volatility. You can see it's trading below 20, so it's not very high. If we search for Merck and we just go to the summary page, we can see implied volatility is 15.4. So it's not very high. And so we in a bull call spread, implied volatility over 20 is generally going to work better for us. But this is a demo. We're doing a demo just to see how this thing is going to turn out. So going back to our profit cycle trading calculator here on our website, we're going to assume we have a portfolio of $100,000. We're going to assume our max risk that we're going to put on this bull call spread is 2%. Today's date is the 4th. The expiration on this was the 18th. And we're going to go look at the spread, the 67.5 and the 72.5 spread. So the stock traded at 76. We're basically looking at support areas here. The support area around here around 70. So we don't think we think a good bet, a good probability trade would be something where the stock closes above 70. So we're going to do a bull call spread of this in this area below 70. And hopefully find something that works that is a good return for us, because we don't think the thing is going to close below 70 in the next 2 months. That's our bet, right? That's what we're going to that's our probability-based bet on this thing. So we're going to pick on this spread here. We're going to say we're going to look maybe at the 70, and then we're going to as the upper strike on the bull call spread, and then we're going to go to the 67.5. So maybe a little bit higher because the 70 didn't offer a whole lot of time value. So we went to 67.5, 72.5. And looking at the calculator now, we can see that when we put in the high strike of 72.5 and the low strike of 67.5, that we have a max exposure on this of, let's see, our max loss is $9,870. And we have a max gain over this period of about 70 days of 6.4%. Annualized, it only comes out to about 32%. So it's not a very good trade. We like these things to have annualized gains of about 100%. And it all comes down to that implied volatility number being only about 15. If that implied volatility number was over 20 or so, we could probably get this max annualized gain up a lot more than that. So I just wanted to go through that process of finding a trade, just to show you a little bit how options trading works, and you can dive into all these different types of trades. You have bull call spreads, bull put spreads. We do a lot of spreads because they're simple to do, and we don't get very complicated with things like butterfly spreads and iron condors and everything like that. We like to keep things simple, and so we stick to our bread and butter trades. And here they are. So that's basically all we're going to talk about today.
All right, fantastic. Thank you, Jonathan. So, folks, again, if you're not in our free Facebook group, you're missing out. If you're not a subscriber on our YouTube channel, there's a potential that you're missing out on videos like this that can be teaching you some of the tricks of the trade that we use. And again, everything about Street Smart Options is about being street smart, about understanding the market so that you don't put yourself in a position where you can literally make some mistakes that are crippling. I will tell you this. I've spoken to people that, they come to us way too late. I spoke to one gentleman that lost $20,000 in October of 18 because the market did some things that he didn't anticipate. Well, the problem was he hadn't paid for any real training, and he was trying to do it on limited knowledge. All trades don't work at all times because the market does change. That's why we trade in cycles. We don't necessarily worry about all these complex trading techniques. We worry about understanding what the market's doing and understanding how to make money. So, folks, I got a special offer for you today. I'd love to give you that calculator because that calculator is something that Jonathan came up with. It works extremely well, and it's inside of our system. As Jonathan said, it's part of our course, but I want to give it to you for free. So here's what you need to do that. Go to our recorded free line, where you're going to hear a recorded message. You're not going to speak with anyone. You can call 24 hours a day, and from any cell phone where you don't have to worry about actually, calling long distance, because we don't have an 800 number. It's a regular plain old telephone number. It's the number at our office. On the voicemail, you'll hear a message about how to get that free calculator. So the number is 615-450-0919. What you're going to get is you're going to get about a 45-second long message explaining to you what you need to do to get that calculator. I'm going to give it to you 100% free. Again, that number is 615-450-0919. 1919. And again, it's a totally recorded message. Unfortunately, we've had a couple changes in our offices, and our assistant's not going to be answering that line, take care of everything. So we've switched that number for our office directly over to a recorded message where you can call 24 hours a day. If you're calling from your cell phone, most people have unlimited cell phone plans these days. If not, it's well worth a couple of minutes on your plan just to hear the message and understand how you can get that free calculator. Again, that number is 615-450-0919. Folks, we really appreciate your patronage. We really appreciate listening to our messages and looking at our Facebook page and looking at our YouTube videos. Have a great day, and we'll see you on the next exciting video here at Street Smart Options. Thanks.